Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm going to talk about the dividends and how they are being paid out by the companies that we own or the ETFs that we own. So what are dividends? Dividends is simply put a reward that a company pays out to its shareholders, and it can be paid out in various forms, but two of the most common ones are of course cash payment, and that can be then either from the earnings profit from that the company makes, or it can be a part of the capital that the company decides, okay, we can distribute this capital to our shareholders, or it can also be in the form of stocks, and that's also a part of capital that they then distribute back to the shareholders. And it's always decided by the board of directors. For the ETFs, that's of course another thing, because the ETF, it receives the dividends and then they decide whether or not to distribute it. So either they are accumulating or they are distributing. So there isn't a board of directors to decide it. But for a company, there is, and they ask for permission to pay out the dividend in the year after that the dividend is earned. So when it's earned in 2022, they are going to pay it out in 2023. And they require then the approval of the shareholders. And most of the time that's asked for in the annual meeting. And in 99.9% of the cases, yeah, it will be approved upon by the shareholders. So most of the time it's quite obvious, and yeah, they it's a formality, in fact. So it's a point on the agenda, and they ask it, and everybody votes, and yeah, most of the time it just passes. But of course, there are always risks involved with investing in companies and in ETFs. So one way to mitigate those is, of course, diversification. And yeah, you have a difference, of course, when you invest in individual stocks compared to ETFs. When you only invest in one stock, that means you have all your eggs in one basket. So you need to invest in multiple stocks to diversify your portfolio. With an ETF, when you buy a good one and they invest in an index that is already diversified quite well. So I will give some examples later. Then the diversification is already built in, of course. So that's already a difference between the two. And once again, when you invest in stocks, you need to invest in solid companies. And when it comes to dividends, you have to look at the earnings per share and what part of the earnings per share the dividend makes out. So what is the payout ratio? If it's way too high or even above 100%, so my golden rule is above 60%, it's not okay. But of course, real estate is an exception on that front. But when it's above 100%, you know that they can't sustain the dividend, and then you're not sure. So solid companies is a must. And for ETFs, it's an index that you like, and then the strategy of the fund managers that you need to like. So if you don't like those, don't invest in it. And then you have a further distinction. So they can be fully replicated ones, or they can be sampling ones, and that means that they invest directly in the stocks. And when it's full replicated, they mimic the index that they invest in for 100%. And when it's sampling, they have a bit more wiggle room to play with the stocks that they buy. And then you have swap based. So then they also invest in derivatives. So yeah, it's not my kind of tea. An exception to that is then the covered call. So it's also swap based, but they invest most of the time 80 up to 90% of their money into the stocks themselves. and then with the rest, with the 10 to 20% they play to ride out options and to earn more money for their investors. And that's how they pay out then a part of capital gain. Because it's a capital gain, it's not a thing that they earn, it's a capital gain, and they pay out a part of that, and it's more of a cash flow cow than that ETF. And then of course you have the cash cows of the cash cows, and that's the synthetic covered calls, which are completely invested into derivatives, and I'm definitely not a fan of that. So now I'm only going to talk about cash dividend payouts. And as you know, in Europe, most of the companies and stocks, of course, they pay out a yearly dividend. A lot of ETFs do it as well, but I really don't like it because it's so slow. And then half yearly, it's already better. And some European stocks do this. So they give a main dividend and then an interim dividend later on in the year to, and the interim dividend is actually a dividend from the year, the running year or that it's going on. So when they give an interim dividend in November, December in 2023, it's from the running year 2023, and then later on in 2024 they decide what would be the total number. They deduct the interim dividend and the rest they are paying out in 2024 then. But for example, ETFs of UBS, a lot of ETFs of UBS pay out half yearly, and I will give an example of that as well. And quarterly, most of the UK and USA based companies pay out quarterly, and I really like that. And a bunch of ETFs in Europe, they do it as well. And I really prefer investing in those ETFs in our core satellite strategy. So all the core ETFs that my wife and I decided upon, they pay out quarterly, and we prefer that besides our stocks that we have as satellites that only pay out yearly dividend. And then you have some companies and some ETFs, especially then in America, you have some companies that do it monthly, but also some ETFs. So, for example, UBS has two or three ETFs that are bond based, and they pay out a monthly dividend. It has only they only have a small yield, so it's nothing to write home about, but it exists. Uh, So, and I'm going to give you an example of a covered call ETF in a few minutes. So it exists for sure in Europe, but it's when it's a bond based one, it's nothing that crazy. But the ETF that I'm going to see is something else, of course. So yeah, ABB. So when I talk, when I gave my video about the SME a few weeks ago, I talked about this stock. So now the price went up a bit, more or less 2 Swiss francs. So not that bad performance in 2 weeks. The dividend, it remained the same because yeah, it was distributed in April, I think, 0.84 Swiss francs. The dividend yield is 2.29 right now, so it dropped a bit because the price rose, of course. The earnings per share, the same for 2022. The payout ratio still 70%. And the PE ratio, 30.55, so it went up from 28 and a bit up to 30 and a bit. And for the past 18 years, they are paying out dividends, rising the last 17 years. And in the last 5 years, there is an average growth of 2.32%. So, nice stock. rather expensive, not financial advice also. So it's just an example of a Swiss stock only paying out one time in a year. So yeah, it's and here it looks like it's more or less in March or yeah, beginning of April. Maybe the beginning of March can be. I don't know when they distribute it. So then from UBS, it's a global investment fund that distributes dividends, and yeah, the price went up a bit as well. So you can buy it in Swiss francs or US dollar, and the dividend is in US dollar. It's a MSCI World UCITS ETF, so 1,512 companies that it invests its money in. The There is 10 million more invested than the last time I talked about this fund. It's a full replicated one, and the yields are really nice. Not as great as some other funds that invest in the same thing, but still rather nice for yeah, for an ETF. And it gives two dividends in a year, so in February and in August, and the dividend yield is 1.36%. And yeah, you see it. It's beginning of February and beginning of August. And then, of course, the main ETF that my wife and I invest in, the SDGPX, or as most of Europe knows it as ISPA, but on the Swiss Stock Exchange it's called SDGPX. So yeah, I always use the name of the SIX stock exchange. So the price, it went up as well, more than €1, and the invested amount also rose above 2 billion right now. The yields dropped a bit. For 5 years, it's still more or less the same, but 5 years it was -2 and now it's -5. And it distributes in January, April, July, and October, and the dividend yield is 6.32%. So rather nice ETF. My wife and I like it a lot. And then you have the covered call ETF of Global X QYLD. In the rest of Europe, most of the time it's QYLE or QYLP. Sometimes it's QYLP. So here you can find the ISIN code. It's not long. It's not noted in Europe for a long time. So it exists since 2022 in November, and it's on the Swiss Stock Exchange from April 2023. And 40 million is only invested in it, but the QYLD strategy and the QYLD ETF from America is been around for a lot more years than this one. So this one is actually performing okay right now. So it's up a bit over 8% since its inception in 2022 in November. So it's rather nice, especially when you know that now it pays monthly dividends. It pays out in all the months, and only January right now is missing. So it started in February, and in the 30th of November, the dividend for December was given, and I just calculated the dividend yield for a whole year with adding just the same amount as the one for December. It's the lowest one. So you can see most of the time it was $0.15. And I also calculated in the value of the dollar compared to the Swiss franc. So it's 0.88 right now. So the dividend yield is 11.9% right now. So it's really high. And yeah, it's a swap based, so it's more risky. But if you're looking for a higher dividend yield, my wife and I, we are going to include this one as a satellite. So it's going to compromise 5%, and we are also going to invest in the S&P 500 covered call of Global X, and that's also going to be 5%. I think 10% is the max that we want to do for keeping our minds at ease. But yeah, it's trying something else. I wouldn't have done it 2 or 3 years ago, but now, because we have a huge base of SDGPX, we think we can afford to go a bit wilder with this one. And why do I in fact prefer quarterly and even monthly actually? Because it keeps you motivated, and it ties you to the stock, the company as well. And I will come to that later on as well a bit. And then of course you have the math behind it. So I made an Excel file. I'm not going to bother you with that. I'm only going to give the numbers that I calculated. But in that one, I theoretically went about investing 10,000 Swiss francs or euro, dollar, it doesn't matter, at 4% yearly, 2% half yearly, that's also 4%, 1% quarterly, that's also 4% yearly, or 0.33% monthly, which is also 4% yearly. And always reinvest the dividend that we would receive on the moment that they distribute it. So it's always at the end of the 6th month or 3rd month or 1st month that we receive the dividend, and we immediately invest it, and then the next month it's earning us again more. It's earning us as well dividend. So if you look at that, after 1 year, for the yearly one, we would receive 400 Swiss francs. I'm always going to say Swiss francs, but it can be any currency, so it doesn't really matter. But 400 Swiss francs in dividends. Half yearly, it's 404, so it's 1% more. Quarterly, 406.04, or 1.51% higher. Monthly, 407.42. So it's not a huge difference, but in the end, when you look at the percentages, it's a nice difference. So not a lot, but who doesn't like the small things can't really enjoy the big things as well. So yeah, and look at that, quarterly it's 1.51. So it's when you would calculate the half, it's more or less 42.5, 1.42%. So it's a bit higher than half between half yearly and monthly. So quarterly isn't that bad. After 20 years, you can look at the numbers here, but once again, it's half yearly 1.74% extra, quarterly 2.64% extra of dividends in the last year. So it's only the dividends from the last year that we are looking at here after 20 years. So the 20th year of dividends, 870.07 for the monthly one, and that's 3.24% more than the yearly one would have given us. So it goes up more and more and more, because of course you have the compounding effect that plays. And once again, it's a bit above the half between half yearly and monthly, the quarterly payments. And if you look at the total received dividends, again, not that huge differences, but again, they matter. And 2.15% for quarterly being paid out, so receiving 2.15% more, you can say it's not a lot, but do you remember ABB in the last 5 years, 2.32% of average growth? So would they have decided to distribute it as a dividend of 0.21 Swiss francs every quarter? You could have, you would add around 2.15% over a period of 20 years, of course, but it's going to be 1.8 up to 2.1% from 5 years on up to 20 years that you increase it. So in fact, when you look at it, 2.32%, and you can add another 2.15%, so you almost double the growth rate of the dividend of the company by just being able to reinvest your dividends more frequently. So yeah, it's enormous that they don't do it here in Europe that often as in America. So yearly is just the worst thing that you can have as a dividend investor. And in Europe, you're often just you can't choose anything else but those monthly paying companies. Especially, yeah, when you look at the SMI, they were all the 20 stocks, they all pay out yearly. So half yearly, quarterly, and monthly are better. So monthly payments is probably asking too much from the companies, because yeah, they need to do all the paperwork that is attached with giving a dividend as well, of course. And yeah, doing it monthly, that's not a fun thing to do. But quarterly, I think it's really something they should consider. And yeah, when I look at certain chats on the internet, and people share their portfolios, and when you look at those and you ask the question, yeah, why do you invest in realty income? Why do you invest in Procter and Gamble? Why do you invest in AT&T? Why do you invest in that? They always say because they pay out quarterly. I receive more dividends in a year, and it keeps me motivated to keep going, to not sell my stock. And when I then say them, yeah, but you can invest in Roche, you can invest in Swisscom, they have better values than AT&T, they have better, Roche has better values than Pfizer. Why do you invest in America stocks, which are, yeah, on top of all the positive things that you can think of, you have the negative thing that it's an American stock, so you have to pay more tax on it. They just answer, I like it more, to receive more dividends, to see those dividends come in. And yeah, motivation is really key. And I would really urge companies to start paying quarterly dividends. It's not only good for the investors, it's also good for the company itself, because when you motivate people to stay invested in your company, they don't sell it after they received the yearly dividend. It often happens. So in the month and a half before the dividend comes, the stock goes up, and then after the dividend is being paid out, they sell it. So they receive the dividend and they drop it, and the stock is actually worth less than before they started buying it. So yeah, I think it's really something they should consider, going for quarterly dividends. I certainly would prefer that they do it monthly. It's not necessarily. Half yearly, that's trying, but not really achieving anything. So please go for quarterly dividends. And with that being said, I thank you for watching. Please subscribe, please hit that like button and leave a comment down below. If you think I should cover other things, other stocks, other ETFs, please let me know in the comments down below, and see you on the next video on my YouTube channel. Bye!